My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one to make friends. I'm just trying to make your money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The curse of winning. The pain of success rewarded. I'm talking about the ingratitude of a shareholder base sated by the intoxication of profits, so easily willing to move on as circumstances and valuations change. And that was the story of today as the Dow backslid 46 points, S&P advanced 0.12%, NASDAQ edged up 0.07%. I find days like today are discouraging. They show you the darker side of the deflation that the Federal Reserve is trying to engineer. And you better get used to these days. There'll be many more. Now, look, as investors, we're all cheering for Jay Powell to tame the scourge of inflation and tamp down the cost of living. You know, I think he's succeeding, maybe sometimes too well. But in order to ensure success, the Fed had to raise interest rates, which makes it more expensive to borrow money, slowing all sorts of industries. And that's the dark side that I'm talking about. Jay Powell did what every other successful Fed chief has had to do to break the psychology of an inflationary spiral. Unfortunately, we also know that this fight against inflation tends to produce a lot of collateral damage, and that's what I want to talk about tonight. See, it doesn't work out for, say, Walmart. That's America's largest brick-and-mortar retailer, which reported this morning and saw its stock taken to the woodshed, plummeting 8%.
A house of pain.
Did Walmart deliver a bad quarter? Hardly. I thought the quarter was excellent. But it did have flaws, namely an inflated stock price. It was priced for perfection coming into the quarter, and lots of merchandise impacted by newfound deflation. That's a toxic brew. Walmart and also Costco have been the two best performers in the large-scale retail because they consistently offered the best prices during an inflationary environment. But that also means they're the first to feel the pain of deflation once prices start going down. And that's how you get this tepid same-store sales number from Walmart. As long as prices were going higher, there was a built-in bias towards stronger same-store sales because the price increases literally inflated that number. Walmart got tens of millions of people shopping each week, and if Walmart had to pay a little more for goods, then so they did. But we're now on the other side, where Walmart's selling goods that it bought higher, and now it needs to cut prices. That makes their same-store sales look worse by comparison. It's just a fact of life. It's arithmetic. Deflation does that to you. So what happens? Okay, investors who like Walmart for its ever-improving same-store sales that benefited from inflation now took a look at the new same-store sales, and what they saw deceleration. It's almost inconceivable to me that one bad line item of a whole host of good ones could bring this colossus down. But the short-hand takeaway from this quarter was, and you heard it over and over again today, decelerating same-store sales. And it couldn't be defeated, so the sellers swarmed in and beat the stock to a bloody pulp. Of course, you might wonder, well, wait a second. Target reported it had weaker same-store sales, too. Yet its stock shot up nearly $20. Isn't that a double standard? The answer is yes, of course it's a double standard. And there's a good reason for it. People are expecting weaker numbers across the board from Target, including earnings. But unlike Walmart, Target posted a gigantic earnings beat. Nobody saw that one coming. The difference between these two stocks is all about the proverbial bar. Walmart's previous performance had been stellar, so the bar for them was set too high. On the other hand, the bar for Target was set down on the floor, and they easily cleared it. Now, both companies commented about a cash-strapped consumer that's caught in the crosshairs of higher interest charges and higher food costs. They were both hurt equally. It's just that going into the quarter, we assumed Target couldn't handle it, and Walmart could. Hey, turns out Target's handling this stress with new and exciting merchandise. Thank you, Brian Cornell, CEO, told us about it. It's working great. Who else is hurting from higher rates and the changes they create with customers? Well, company we had on last night, Palo Alto Networks. They got trapped by the Fed's relentless rate hikes. Last night, the CEO, Nikesh Arora, told us that the cost of borrowing money is causing his customers to keep their contracts shorter. Shorter contracts means lower billings. Again, like the decelerating same-store sales for Walmart, billings are supposed to be the key metric that gauges the performance of a company like Palo Alto. But this time, the billings actually didn't give you an accurate read of the company's sales or profits. That's what Nikesh was telling us on the show last night. It was, alas, confusing. And when your stock is the sixth best performer in the S&P 500, as Palo Alto's was as of last night's close, confusion doesn't cut it. You can't convince Wall Street to switch the key metric, even if it makes sense. People just assume you're making excuses. And then there's the obvious impact of the Fed mandated slowdown. I mean, have you seen the price of oil? It plummeted. This could be good for Jay Powell. It plummeted nearly 5% to less than $73 a barrel today. I think it's 70 that we get an OPEC meeting at the end of the month. The Saudis will make it so it stops, but not right now. Oil had run up on a belief that the war in Gaza would spiral out of control, turning into a regional conflict across the Middle East. Now, something like that happened in Yom Kippur War in 1973 when oil soared and soared again. Speculators looking for a repeat of the 1973 war went huge into oil, wading into the darn stuff. And now they're trying to extract themselves as world events just didn't play out their way. It's not just geopolitics. You're seeing oil prices fall from lower use from a cessation of panic. Obviously, this is good news for the consumer, but the oil stocks are cratering. Chevron, Conoco, Occidental, they all got clobbered. I think Occidental, by the way, has been brought up way too high by Warren Buffett. Everybody knows he owns a big stake in the company, and if the company doesn't get a takeover bid, the stock, I think, goes the lowest of all these ones that I'm talking about. Again, not everyone benefits from deflation. How do you handle this moment? How do you build a portfolio around it? Well, I think you look for companies that were ready for deflation. Costco, for example, has monitored price levels, and its amazing CFO, Richard Galanti, not only told you to expect deflation, the company itself was even pushing deflation along by demanding lower prices from its suppliers or making its own branded stuff and selling it through the suppliers. Or you look for companies with such incredible pricing power that the Fed's fight against inflation can't really impact the bottom line. Hey, that's what's going on with the stock of Microsoft. They just held a conference where it talked about products like it seems like the sky's the limit on pricing. Microsoft's Copilot artificial intelligence helper is getting rave reviews. A terrific Piper Sandler survey this morning showed that 64% of its respondents spent less time processing email, 70% were more productive, and 77% would order Copilot over a free weekly lunch. That's pricing power. I believe that AI enablers like Adobe and, yes, ServiceNow are both price makers, and that's why their stocks seem to live on the new high list. It's hard to fathom that a Walmart can plummet while Target roars higher, or that commodity deflation can happen so swiftly as we're seeing in the oil pits. But that's what happens when the Fed begins to win the fight against inflation. And it is doing that. The good news of lower prices finally is breaking this inflationary spiral is also bad news for the profits of many companies. It'll take some sorting out, but never believe that lower consumer prices are just a magical elixir for stock market gains. Bottom line, saying goodbye to inflation is sweet, but there's a little momentary sorrow, too. That's the sorrow of a Walmart or a Chevron or a Palo Alto Networks and so many other companies that are victims of their own success. David in Virginia. David.
Booyah, United States, David. Booyah to you, Jimbo.
Man, what's happening? Thank you.
1 paper away from graduation at GW University. Tell me about that innovative technology company, FTX.
I'm glad you called it an innovative technology company because that is exactly what Raj Subramanian is doing to it. And I think that's why you're getting a nice, I'm telling you, 254 is a nice price. I would be a buyer of FedEx right here, right now. How about Karen in New Jersey? Karen.
Hi, Jim the Hat Cramer.
Yeah, you betcha.
All right. I recently purchased shares in Booking Holding.
Yes.
I see the company as the NVIDIA of the travel industry.
Whoa.
At $3,100 a share, where do you see the stock going from here? And do you think a stock split is a strong possibility?
Well, I wish Glenn Fogel would split, but you're absolutely. I mean, NVIDIA's high praise, obviously, but they have the best. They probably have one of the 4 or 5 best quarters of this reporting season, and I think you're absolutely right to go for it. If they split that stock 10 for 1, you'd have a lot more buyers, but they seem to want to keep it, at a $3,000 price. I think it's silly. Let's go to Anthony in Florida. Anthony.
Booyah, 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 Jim. How's it going?
Triple booyah. It's the second triple booyah. I'm doing well. How about you?
Pretty good, pretty good. I'm calling you about ticker ULCC, Frontier Airlines. I'm hearing domestic travel is coming down, and I know a lot of the business travel is coming down as well, but I
pure
couldn't
spec,
help myself
pure
under
spec, my friend. $4 spec. I'd rather, you put $5 in daily, on DFS, daily fantasy on Sunday, or you put $3 in this. I think it's pretty much the same thing. Actually, no, I'm pretty good at daily fantasy. All right, anyway, breaking the inflationary spiral is welcome news for most, but never believe that lower prices are going to lift the entire market. Man Money tonight. Should you hitch a ride on the rails with CSX? Or could inflationary pressures put on the brakes? Don't miss my exclusive with the CEO as we talk everything from autos to energy. Then, interested in buying on holding on its post-earnings decline? Hey, I'm going to give you the real story on this one. Plus, is it high time for SciTime? I'm sitting down with the CEO of this under-the-radar Apple supplier, so stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.